This past year, the pandemic has forced a lot of big banks, a lot of manufacturers' banks to tighten up their approval process. Now, if you're a deep subprime or a subprime consumer, in essence, anybody with less than a 660 credit score, things could be a little bit more difficult for you when it comes time to getting approved on an auto loan. Let alone getting approved altogether is going to be difficult, but what sort of rates you may qualify for is another thing. In this video today, what I want to discuss is exactly the things you should be looking out for and what you should be expecting if you're somebody with bad credit. And what I want to do for you is after I've broken down exactly what to be going after, I do want to give you some resources so that you can pursue not only shopping around for the best possible deal on a brand new car, you'll be able to check out auto loan rates, get your auto credit scores, and if you haven't already, please consider subscribing, smash the like button if you appreciate solid car buying advice content. Now, without further ado, guys, I do want to dive right into it. The first thing that I want to mention is you've got to know and you've got to understand that the dealerships don't care what your Credit Karma score is. I've said it multiple times before. It means more now than it ever has because dealerships are largely using your FICO auto scores. This is the Score8 typically model, the Score8 model that FICO gives. However, they have one in particular for your auto score. I have a link in the description below that you'll be able to purchase all three bureaus' auto scores. However, if you get your FICO score from, let's say, your credit card, this is relatively close to your auto score, but your auto score also factors in additional risk or lack of risk particular to your credit profile. Now, big lenders in particular are using their names to their advantage when they're trying to put out insanely high interest rates and making you jump through hoops to get to these insanely high interest rates. If you're in the deep subprime or subprime category, big name banks, I'm not going to say which ones, are charging astronomical interest rates, especially more so on used cars. With new cars, they do face a lot of competition in this arena. However, used cars is a free-for-all, and I'm positive if you're looking at a car, a reliable one at least, you're likely looking at something that's within the $20,000, $25,000 range. Keep in mind that when you're shopping around for an auto loan, the dealership's main purpose, their main job is to get your butt into a car. Never think that the dealership is doing you a favor by hearing out your situation and helping you out. They're doing their job. So keep in mind that every single thing that the dealership is doing for you is negotiable. If something seems like it's just a little bit too much, it's outside of your comfort zone, negotiate it. And specifically what I'm talking about right now is the fact that anybody with under a 660 credit score is looking at interest rates between 7% for new cars and 11% for used cars. Worse, if you're under a 600 credit score, going into the lower fives will land you an interest rate at around 11% for a new car and 17% for a used car. Why is this important? Well, first and foremost, this is important because it gives the dealership a lot of room to mark up an already insanely high interest rate just a little bit more, because who's going to notice? And realistically speaking, when this happens, it happens in the sense that, okay, if a bank is working with a dealership saying, hey, listen, if you got any bad credit customers, we can get you probably somewhere in the 13% range on, say, a $20,000 loan. What the dealership can do is turn around, take that 13% and mark it up to, say, 16 or 17, and say, oh, we can do you a favor. Let's see what we can do. Let me make a few phone calls. And they managed to knock off 2%. Boom. They still got 2% out of you. Now, the reason why this is so important is normally, okay, say if they had 1.9% and marked it up to 3.9, the rate is already decently low so that it's not adding insane amounts of money to the finance charge, but you're already starting off with an insane finance charge to begin with. Why are you adding that much more unnecessary interest to the loan? It makes no sense. However, the idea behind what I'm trying to tell you is expect an auto loan interest rate somewhere in the double-digit range on a used car. However, the idea is you want to get as low as possible on the double-digit range to single digits, if at all possible. So say you're a 500 to 600 range consumer, you want to do your absolute best to get above 600, and there's ways to do that. And there's ways to actually qualify yourself for 600 plus credit score type rates. The way that you want to do this is the lenders, they're all looking for a set of requirements, a set of criteria that will usually land you, I'm not saying it's going to land you at 2.9%, but it's going to land you a much better rate than say 14.5% or 16.5%. And what I want to do is list off for you some of these criteria so that you don't rush into the decision because you think that, a few months of waiting is not going to help anything. Now, first and foremost, what I want to do for you is tell you exactly what a $20,000 loan will cost you at a 560 credit score versus, say, a 640 credit score, going from 17% to 11.4%. If we're at 17% on a $20,000 loan, we'd be talking about roughly a $510 payment with a total interest, a total finance charge at $10,085. Just doing a little bit of minor credit repair in the sense that you're just using an unsecured credit card or some sort of program that allows you to invest a little bit of money in a savings account that reports to your credit score over a few months, bumping you up to at the very least, say like a 610 to a 640, making the interest rate go down to, let's say, an 11.5%, brings down the payment. A whopping $60 going down to $450, the total finance charge going down to $6,500. So the very notion that just spending a few months and repairing your credit and then applying with some criteria that will help you get a better rate, fantastic move. Couldn't recommend doing this more because a few months could save you $3,000 or 15% on your car insurance. Anyway, the next thing that I want to say is that could be a complete game changer is you should be looking, whenever possible, at a new car. So that way you can qualify for new interest rates as opposed to used. Let me give you an example. So on a used car, the average interest rate for somebody with a 580 credit score would likely be 17%. However, that same 580 credit score on a new car, the interest rate goes down to 11%. On somebody with a 640 credit score, the average interest rate would be about 11%. On a new car, that goes down to 7%. It's imperative that whenever possible, if you can, try to get a brand new car. At the very least, if you need to go down a few trim levels or go down in size, that way you're not spending astronomical amounts of money just on interest alone. And also what this will do is it will introduce a host of other available options, such as franchise dealerships and not buy here, pay here, side lot, mom and pop dealerships that are looking to just drill you. Sorry, too graphic. What you want to do is have a job for at least 3 months, paying you at least $1,500 a month. Why $1,500? Because what this does is that 25% of that is a payment on a $20,000 car. They're looking for your income to be no less than 4 times the amount of the actual payment. So if you're paying $350 a month, they want you to make at the very least $1,500. Last tip, this is a big one. This is going to come in clutch. If you can, put down 20%, even if you have to take out a loan from a friend. Whatever you got to do, try to get a loan out on the down payment. That way you can satisfy one of the biggest requirements, which is the 80% loan to value rule. The bank doesn't want to loan you out more than 80% of the vehicle's actual value. You want to pay at least 20% down. That way you can actually qualify. You can get approved on the loan. And that way you can not pay an absurd interest rate because another bank is approving you, but on a higher interest rate. Hope this video helps you guys. Multiple links in the description below to shop around for a new car deal. Check auto finance rates as well as your auto credit scores And if you found this information useful, please consider subscribing. Don't forget to give me a thumbs up. Thank you so much for watching, guys. We'll see you next time.